get back to the big, beautiful bill and the impact, of course, on what we're seeing on markets and in terms of currencies as well, and get into it all with Tony Sycamore from IG, who joins me now. Tony, great to see you. So snapping a winning streak in terms of the NASDAQ. What are the technicals telling you, though, when we saw these record highs breached on both the S&P and NASDAQ?
Yeah, the NASDAQ's had a 6-day winning run, pushed through record highs, and it ran out of momentum last night a little bit. And I think that was partly to do with the OBB, as you mentioned, getting passed by the Senate, which the market then starts to look for stocks which are more exposed to tax cuts, and also some stronger jobs data last night for JOLTS. So the Dow did well there. The NASDAQ, some of the heat came out of that market, and it has been such a wonderful run for the NASDAQ. It's not surprising now we're seeing some rotation. The Dow's still probably about 800 points below its record high. So it makes sense to take some out of the NASDAQ, out of the S&P, and rotate into the Dow and some of the other indices more exposed to Main Street.
All right, now the ASX 200 started the new financial year sort of, I guess, pretty flat there. But I love how you say influenced by school holidays.
That's right. Well, we are in school holidays in Melbourne. We're coming into school holidays here in Sydney. And it's a time when we're also seeing holidays in the Northern Hemisphere, in Europe and in the US. And that volume really starts to dry up. We see the end of financial year reporting going through now for the next week or so. And that really is sort of portraying into the very quiet session we saw in the ASX 200 yesterday. So, I mean, the ASX 200, it was a very quiet end of financial year. There was no fireworks, which is very unusual. There was no need to, because we're sitting 100 points below the record high there. And right now we just consolidate. We're waiting for the jobs data, which comes out in the US tomorrow night. We're waiting to see what comes ahead of the July 9 deadline in terms of tariffs. There's a lot now over the next week and a half, which can influence Fed rate cut expectations and also trade policy. So it's a bit of a wait and see for me for the ASX 200.
And when you talk about Fed rate cut expectations and the big, beautiful bill, the US dollar near a 3.5-year low. Great news for any Aussie traveling overseas, well, in terms of the US dollar relationship.
That's right. I mean, the Fed rate cuts are starting to come into the play, that they're going to be sooner and they're going to be deeper. Now, 2 weeks ago, Jules, we sat here talking about the chance of a July rate cut from the Fed. At that particular time, it was about 10% price. But overnight, we heard Fed Chair Powell saying he's taking nothing off the table. He's talking about the next 4 meetings, which includes July. We're up to around 25%, which really puts tomorrow night's jobs data firmly in the focus. Now, if that is weaker than expected, I think you'll start to see that breakaway mob on the Fed that has been pushing for earlier rate cuts, or at least alluding to earlier rate cuts. I think that drumbeat will grow louder there, and we can potentially look at a rate cut in 4 weeks' time. But it all depends on the jobs data on Thursday night. Now, for the Aussie dollar, it is certainly playing out in terms of broad dollar weakness, which is helping the Aussie dollar push to a fresh cycle high overnight. Again, it didn't really want to go on with it overnight, because we do have some very important data coming out here in Australia, and of course in the US, as we mentioned, the non-farm payrolls. But if that non-farm payrolls data is in line or weaker than expected, I think it gives the Aussie the green light for it to take the next leg higher up towards that 67.30 to 67.50 area.
Wow. All right. And you keep talking about non-farm payrolls on Thursday, obviously, because Friday is July 4, so it's a day earlier. How is all this playing into the oil and gold markets?
Oil, I mean, it had a horrible week last week. It obviously started very high and retreated quite significantly. And it's been a bit of a dead cat bounce so far from off that support around $64 to $65. That was the top of the range we saw for the prior 2 months. It's holding above there. And of course, we've got the OPEC meeting coming out this weekend, expecting to see an increase in production again. But I think the swing factor here for crude oil will again be the jobs data. And does a weaker than expected number get the Fed moving earlier than expected, which starts to support that demand for crude oil, which has been missing for so long. So right here, right now, above $64, allow it a chance to get back up into the low 70s. But if it were to break below $64, then unfortunately we're back into that range, and there's no reason why we can't trade down into the high 50s at this point of time.
All right, Bitcoin a little bit lower. So this is the apparent demand on-chain metric slipping into negative territory.
Right, so it's showing that the demand for Bitcoin has dried up, and it's not keeping up with the new Bitcoins being produced by miners. And it was something which was flagged a few months ago, and has been flagged again here. And it's coincided with Bitcoin getting towards the top of the trend channel there around 109,000. And for me, again, it's going to come back to that jobs data on Thursday night. If it's a soft number, then you can probably look for it to retest with the idea behind earlier and deeper Fed rate cuts pushing all risk assets higher, including Bitcoin, takes it through that 109,000 area up to fresh record highs. But right here, right now, it's trading within that corrective trend channel. The bigger picture is still higher. It's just waiting for that catalyst to break higher at this point of time.